A lot of long-term investors just think, if I'm a long-term investor, I shouldn't even really bother about political risk. It's just, short-term noise. At the end of the day, it shouldn't have a big impact. But based on what you're saying, those could be potentially longer-term concerns, right? So what's your view on, how much does political risk matter for long-term investors?
Well, I think even now we've got that issue of long-term investors understand that it's not really who is in power mostly doesn't tend to affect your investment. Elections come around once every 5 years. So the number of elections we've had, it's not that many over the past 20, 30 years. So it's very hard to draw any statistical significance from those numbers. Oh, how well do markets do under Conservative governments? How well do they do under the Labour governments? The last Labour government was elected in 2005. And the world was very different then. So in one sense, it's hard to really price in the impact. Oh, markets did this well under a Conservative government, they do this well under a Labour government. The same way that around US elections, you get how well do markets do under Republican presidents and Democratic presidents. The answer is it doesn't really matter that much. Clearly, with political risk in other countries, it does play more of a part. But I think in the developed world, it's more whoever's, for example, for this election in the UK, whoever's in power will face these same questions, and the responses are likely to be broadly the same. I think that what speaks to the frustration with politics at the moment in the West is that a lot of the solutions look broadly the same. There's a lot of tinkering around the edges with the state. There's an extra penny on tax here. There's a slight increase in fuel duties, a slight decrease in VAT here and there. But the basic core of what goes on is the same. And so the net impact is quite limited. Having said that, you are right to say that perhaps this time around there's a bigger worry about, well, how do we sustain governments and states in their current setup, and how will that affect markets, really? We've had 20, 30, 40 years of globalization, really, and now you're seeing this retreat from that. So there'll be increased tariffs, which does start to affect consumers a lot more. You've had the EU and China discussing EU tariffs on Chinese electric vehicles. So there's clearly elements that will come into play more and more over the next 5 to 10 years, at least sort of in the day-to-day decisions, I think, for consumers. If you're looking at cars and you've got a Chinese model to consider now as a serious alternative, but they're slightly more expensive because of tariffs, what does that mean for car sales in those countries?
Now, if you're a short-term investor or a more active investor, what's the kind of best way to play these elections? Do you see the best expression or the best trades or in stocks, in bonds, in FX? What's the kind of best way to play these elections?
Well, if you're looking at the immediate reaction, I think it's probably FX markets for you because they're overnight. You've got the immediate reaction there. You've got some degree of liquidity. Of course, you can trade a host of major markets with us 24 hours. So FX obviously is 24 hours over Thursday night, for example, indices as well, and commodities. But I think it's where FX will be the immediate focus, because you've got the immediate reaction, if you like. You've got the direct effect on the UK economy. And so I think there'll be a lot of popularity in the pound this week, really, and then particularly overnight. Something we saw, of course, with the 2019 election, and indeed even more so with Brexit in 2016. That's where people tend to, I think, gravitate, because you get an immediate vote, if you like, pun, I suppose, intended, on the UK economy and the outlook there with the new government as those results start to come in. It's still very widely telegraphed, though. I think that the widespread expectation of Labour victory means that there's not the uncertainty there was around 2016 or indeed 2019. Really, how well would the Conservatives do back then? This time it's now not whether Labour will win, it's how many seats will they take and what will that mean probably beyond the first 100 days of the administration.
Now, do you see any risks being mispriced? We've seen some pretty significant moves in French markets, for example, French stocks. Do you see any risks that maybe some moves have been overdone, or on the contrary, maybe in the UK, investors are kind of misunderstanding or underestimating the potential risks coming from the election? What's your view on kind of opportunities?
Yeah, I think you could argue for European stocks in reaction to those French elections being overdone. You had those big losses in the CAC 40 and other European indices after months of gains, and partly that was perhaps a profit taking, partly an overreaction, I think, really, because as I said at the beginning, markets don't like unexpected events, and the snap election was definitely that. And suddenly there was the how well will the far right do, indeed, how well will the far left do. I think what we've seen from the first round of French election results has been an expectation that, okay, they probably won't form the next government with an outright majority. And what you get is political paralysis, which in the short term is what markets will be content with. No big changes. It'll be hard to get anything done. In the longer term, that has bigger ramifications for French government bonds. And so that's a more important issue to watch. But certainly in the short term, maybe the overreaction, that the reaction to the French elections was overdone. And you had big losses. You've already started to see some people dipping their toe back in the water here. You had a big rally for European markets on Monday. If you get on Sunday evening, French elections come through and there is no overall majority for one party, I think we'll probably see a continued rally on that front. So that's one to watch. For the UK, it's harder to say, I think, because, as I say, this has been so widely expected in terms of the result. The markets are tending to price in the Labour victory. And even that, I think, they're just glad of the stability. UK assets are finally popular again, or finally becoming popular again after years and years in the wake of Brexit and the 2017 election and the uncertainty that brought, and the 2019 election, and then COVID, really. They were really, really out of favour with global investors. The FTSE 100 underperformed, the 250 didn't do well, and suddenly they're coming back in, partly because they're cheap. If you look at the FTSE 100, it trades at a P ratio of 12 or 13 compared to the S&P's 24. So they're still cheap on a relative basis, and so they're now popular again. So that's why I think they've done quite well over the last few months. And I think there's still room for further upside, and the election will be just a case of, we're glad Labour won with such a big majority because it gives them stability for the next 5 years. If you had a hung parliament, if we do wake up Friday morning and by some remarkable event, Labour haven't done very well, and maybe the Lib Dems have done better, maybe you get some volatility. But in that case, I think what you get then is a Labour government in coalition with the Lib Dems, because the Conservatives probably won't have the strength to form a governing party, even with the Lib Dems. And after 2010, I don't think the Lib Dems would dare go near the Conservatives, really.
Awesome. Thanks a lot, Chris. Now let's move on to the questions. So please share your questions in the Q&A box, and don't forget to upvote your favorite questions so that we can answer them first. So, Chris, what are the biggest mistakes people make trying to trade around elections?
I think it's the biggest mistake that people make around trading most events is that they forget that a lot of it is you're sort of reacting to the news, and you forget they look at the initial reaction to the news, if you like, in the markets, and they assume that it will continue, and you forget that often you get a lot of volatility. So the biggest mistake they make is to trade probably with too large a size and too narrow a stop loss. Really, a wider stop, smaller position size lets you ride out a lot of this volatility, because what you're seeing in price movements around events, whether they be non-farm payrolls or elections or even earnings reports, is the unwinding really of positions that were taken before the event, and then you start to see a change in movement, and you start to see different positions being taken. So it's people who already had a trade on. So if you're trading the wake of it, you're almost trading against the reaction, the initial news itself, and the reaction to the initial news, rather than any kind of new developments, I think. So that's the key thing. People underestimate the volatility, and they do things like they go long and short at the same time, which seems like a great strategy. You know, if you buy and you sell, surely it's got to go one way. And you think, well, what could go wrong there? Well, A, you're paying the spread twice, but also B, you may well just get stopped out twice, because you often get, particularly if you look at payrolls, they always say the first reaction is the wrong reaction. Say it rallies, and then so you buy it, and then it immediately drops, and you get knocked out, and then you sell it, and then it rallies again. And you just got caught out two ways. I've often said to people, the biggest mistake people make around trading elections and events is trading them themselves. Just let the event happen. There's plenty of time to trade in the wake of it. There'll always be another day. Let the dust settle, and then think about what your position should be. If you're already in it well in advance of it, then widen out your stops and be prepared for volatility. But you don't have to trade the event itself. It can be very, very tricky to do, and often you just get caught up in the sort of conflicting waves of buying and selling, and you end up sort of, instead of trading once, trading 2, 3, 4, 5 times, and just having 5 losses, rather than just stepping aside and letting the event play itself out, really.
Interesting. Strictly from a monetary and investor's perspective, which party offer the most promising future?
Well, I think it's looking at the next 5 years. I think it will have to be. Well, there's almost no discussion. That's the problem. I think the chances of Conservatives being the largest party on Friday morning are so vanishingly small as to be it's impossible. None of the polls get them anywhere near a majority. So I think it's really a discussion of what Labour will do, and it's going to be a discussion about how much their potential is for a wealth tax, what the changes to inheritance tax and stamp duty will be. And that's where perhaps some people will find that it's a less promising regime for investors. Also, the changes to offshore investments mean that maybe the City of London doesn't look as attractive for a lot of international investors as it did, I think, because there'll be the need in the Labour government to raise more money. There'll be a lot of Labour MPs, essentially, who are quite left-wing, and who will put pressure on the new government to implement this in order to raise that money, not to tax more people at home, but rather look for sources of funds from overseas investors.
An interesting next question. Do you believe under a Labour government, we will see an outflow of wealthy individuals and or companies to avoid the new tax regime, especially if it's obvious they will be in power for more than one term?
Possibly, yes. There'll be a lot of companies who may be looking at maybe not investing in the short term. They want to see what the first budget will be from the new governments that will come in the autumn. So there'll probably be a lot of uncertainty. But even this morning, we're seeing reports that said, analysts saying that the Labour government will be good for the UK economy. And I think it's that stability element, really. And if you get that, particularly, say, if there's more uncertainty around what happens in Europe, and if the French elections are sort of a pointer to what comes next in Europe, then yes, maybe that's going to be the flip side from the last sort of 6 or 7 or 8 years post-Brexit was the UK's uncertainty versus stability in Europe. If it's going to be now stability in the UK versus uncertainty in Europe, actually maybe it'd be paradoxically more of an attractive destination. The Labour government won't want to kill the goose that lays the golden egg. They won't want to put too much pressure on foreign investors because they know how important the City of London is to the UK economy. So it's a very fine balancing act. It's why over the past 6 weeks they've been courting business to say, actually, we are the party of business. You can be sure of a warm reception from the Labour government. We're not. This isn't Labour government, the Labour Party 2019 and Corbyn. It's a very different party.
Given how much is likely to change during the course of a UK parliament, or even between now and 2027 in France, how much weight should investors put on what's in parties' manifestos?
Yeah, this is a really good question, actually, because it's a long way. If you look back 5 years to 2019, we had a stonking Conservative majority, a much smaller one than actually what Labour's projecting this time around. And it was, this is going to be a Conservative government that runs for 15 years. Well, we knew that didn't work out. So there's a lot of uncertainty in politics in all parts of the globe at this point, really. So it could be that this is the beginning of a longer-term Labour government for two administrations or more. It might be that by 2029 you're still facing the same problems that the country faces now, and there's a lot of dissatisfaction. So I think we shouldn't be automatically assuming that we're in for a long period of Labour government. In the same way in France, things could look very different by 2027. So yes, it makes it much harder to try and second guess things. And so that's why, as an investor, maybe sometimes you have to sort of tune out the noise of elections. It seems important. There's so much in the news about why this election is important, what it will do for UK stocks, why the French election is important. Maybe in the end, it isn't. Maybe the best thing you can keep doing is sort of, if you're investing monthly, is to put that money to work every month, or to wait for those investments at attractive levels. As I say, the FTSE still trades at 12 times earnings, FTSE 100 at 12 times earnings. So it's not expensive. So there's plenty of maybe room for further upside, in the same way that European stocks could continue to do well, even with the political instability. Sometimes investors, you just have to sort of step away from the news. It's the best thing you can do, really.
Chris, what's the best way to hedge against an unexpected election outcome?
I suppose it depends what your unexpected election outcome is, really. If we were to say the unexpected outcome is maybe a hung parliament, then I think you are looking You can do it with options, and you can try and trade the volatility around sterling, trying to expect maybe a short period of volatility rather than taking a long or a short position. You can look for an options position, say a straddle that captures that volatility without getting over much overall direction. That's one way of doing it, I think, really. You can look at buying other markets, say going long the euro to get maybe some more, if some of the funds go from the UK to Europe, or certainly look at, again, US stocks. They remain massively popular. Just move into geographies that aren't affected by the UK election results. Probably the best way to look at this, I think.
Do you believe that trading will become more volatile following the US elections?
People are always hoping, aren't they, for a rerun of 2016 and the volatility we saw then around the US election. Maybe even now, because I think we were looking at a couple of weeks ago, obviously, Trump versus Biden. And now you have Trump versus possibly somebody else. That's the biggest chance we've had for volatility. It's notable that you're suddenly seeing a lot of these news headlines saying, oh, Kamala Harris is actually well placed to replace Biden on the ticket. So maybe you do get a bit more volatility around that. The thing to remember is it won't be a repeat of 2016, I think, famous last words, because Trump is a bit of a known this time around. Last time it was, oh my goodness, what will he do? How will he be different from other Republican presidents? And in the end, it's fair to say it wasn't that much. There's a lot of culture war going on, but the impact on business is fairly minimal. And US stocks did very well. So I'm not sure we can see quite the rerun of volatility around the US election we had in 2016, maybe a bit more from 2020, but it's not quite the same. There's a lot of known quantities this time around with what both parties will do. So there is room for the VIX to spike in the short term, but it's still seemingly happy around the 14 level, 13, 14 level, and that could go on for much longer than anyone thinks, really.
Now back to long-term investing. Are there any adjustments or rebalancing recommendations for our investment portfolios in anticipation of the election results? Should we consider any defensive or offensive moves?
Well, I think it's still seeing more upside for UK stocks in the medium term. They've had a good run over the past 6 months, but I think there's still reason to expect more upside because of the valuations, and it still makes it look attractive vis-a-vis the US. Even though you don't have the tech stocks that are driving earnings growth in the US, you've still got a lot of strong companies in the UK and indeed in Europe as well. So I think investing isn't really determined by elections. I think it's about looking at the data, seeing how the European economy performs. We're expecting another rate cut from the Eurozone. We're expecting a UK rate cut at some point, probably in August. So that might start to make things look more attractive for investors in these stocks as well beyond that. I think I wouldn't be surprised if both elections in the UK and France fade very rapidly from the scene and the impact diminishes quite a lot, and you're still looking at the same things. If you're long-term investor, looking at valuations, you're looking at trends if you prefer technical analysis, or indeed mix and match both. There's a lot of good dividend yields on offer in European and UK stocks as well. So that's still something I think to consider, particularly as inflation starts to recede, we hope, and rates come down in various countries. That will make those dividend-paying stocks a lot more attractive too.
Now, a great question from Mitch. Are there specific sectors or industries that tend to perform better or worse during election cycles, especially with a Labour win in the UK?
Well, certainly the ones to look at are banks and maybe energy stocks a bit more. Banks tend to do quite well around elections, and also retailers, interestingly enough. There's a history of retailers doing quite well. It seems to be that elections, in the wake of elections, you have a sort of release of consumer spending. People wait and see what happens. So retailers look for. Energy stocks do less well. I think there's sort of view that there will be further pressure put on the oil and gas industry, particularly with the move to net zero with Labour. So that might make life difficult for that sector, particularly. Definitely one to watch, I think, there.
You or ESG investors, for example, likely to make big moves into our out of a country, depending on things like net zero pledges?
I'm not sure. Is ESG still a thing? It just seems to diminish in importance quite a lot recently. I don't see it on the newspapers as much. I think there will be questions over what green energy, what net zero will mean for the UK economy and indeed for consumer spending. So that's something to bear in mind. Whether you see a watering down of those pledges once the election result is in is one thing to consider. Clean energy clearly isn't going away. We're living in a world that uses this declining trend for oil, I think. People are looking to move away from it, but it still remains an important part of the economy. So there's, as with everything, it doesn't usually make sense to go all in on one expectation or another. So to go all in on clean energy stocks isn't going to be the greatest move. I think it's more important to look at to make sure you get that diversification to sort of cover all the bases, really.
Now, Chris, we're near the end. Any 30 seconds final advice to our Finimizers?
Just be prepared for volatility on election night, and then try not to read too much into it into the short term. I think really the market's reaction to Thursday night, Friday morning is likely to be relief that it's provided a stable outcome. I think if we do see the outcome as expected, beyond that, it's more about keeping an eye on the broader economic trends, look at the economic data, and trying not to get too caught up in the day-to-day headlines that you inevitably get around a new government.
Chris, thank you so much. It's been super, super insightful. Thanks again. Don't forget, Finimizers, our biggest event of the year is fast approaching, and you can now pre-register for your Modern Investor Summit ticket. This two-day event will happen on December 3rd and 4th. It's packed with back-to-back sessions and workshops led by the biggest in finance. And that's going to be the perfect opportunity to elevate your investment knowledge and network with fellow retail investors. You can pre-register for your ticket using the link shared in the chat now. And as you leave the event today, a pop-up survey will appear on your screen. Please take a few minutes to let us know what topics you're interested in hearing about future events. And thanks again for joining us. Chris, thank you so much for your valuable insights and views. Thanks everyone for joining, and see you very soon. Have a great day.